Hey everyone, happy Monday. It is a great Monday because we are going to talk some markets today here on Real Ag Live. I am Kara Oosterhuis and I'm here to be your host today. So I'm excited to have you guys along for the ride. It is always so great to be able to interact with you guys a bit and, just a little different than sitting in the webinars that might be recorded. It's great to just be able to talk and interact. So, on that note, if you have any questions, comments, concerns, put them in the question box. And whether you're watching on YouTube, Twitch, Twitter, or Facebook, put them in the comment section and we will get to them right away. So, I am going to bring in today's guest here. I have Robyn with Viterra. How's it going today?
Great.
That's awesome. So, we're going to talk today, like I said, about markets, commodity markets, of course. But let's start a bit about lots of people, if they've been paying attention to any of the markets lately, they've been watching some of this stuff that's been going on with the GameStop and the Robinhood traders that are going on with Reddit right now. And the question is, could this come over to the agricultural markets? Do you think this is a possibility?
I think that any market that is traded, globally and has the opportunity to have social media impact, could have that same thing happen. And I think, we look at what's happening with silver this morning. The Reddit support of silver and some of the short taking that's happening is driving the silver price up. So, could that happen in corns and soybeans? We're already seeing, the fund position, so the money that's entering the markets, impacting either a positive or a negative way in agriculture, and they can have an impact when they change their positions or which positions they decide to take, even though the fundamentals, so the actual, global supply, how the crop looks, the weather might actually say the opposite. So absolutely, you could see something happen. I'm predicting that, coming out of the GameStop, I think that all markets are going to take a look at how they regulate themselves as well as the impact, or how to maybe watch social media in the future and how that could impact any market.
Yeah. And what sort of impacts do you think this could have if this trickles over to the agricultural market? Would this have any impact on would companies look at increasing bases from there, or is there what sort of impacts do you think could happen?
I think it's more to do with how funds are managed, and how and who can take positions. So, making sure that, people are, well, I think we already have those regulations in place, but I think it'll be more to do with how, social media is being used and how people can actually have positions in commodities. So whether the
Yeah.
position is kind of being driven by a real fund or not.
Yeah.
And I would
Totally.
say that
That's it.
what you might find happen is companies that are, trading commodities might put, a little bit more control in to protect their risk. So they might, your comment about basis, you might see more risk management happen so that you could prevent, a knee jerk reaction sinking you, right? Or driving something way up or driving something way down.
Yeah. For sure. It's an interesting time to say the least. When we're talking driving up, we may as well touch on those canola markets right now. What are you seeing? What's going on? Prices still seem to be increasing. But have most of the producers sold now at this point?
So to answer your question, I think, I saw a line last week, and I think it's really prevalent to what's happened with the markets, and it's called the Great Chinese Grain Robbery. So what's happened is that China has just taken some massive amounts of global supplies, and they've done this to secure their the feed industry as well as the protein needed for their population. So everybody knows the African swine flu wiped out the herd. China represents about 30% of global hog operations. So that's a massive loss of demand when that happened. And we saw the markets go down, 2 years ago because of that. And what we've seen this year is this big push to rebuild that stock. China is reporting that they're about 90% covered on the rebuild. However, the market thinks it's closer to about 80%. And long story short, all of those, hogs, cows, everything really needs a lot of feed to consume. And that's been basically just sucking everything across the globe, whether that's a barley, soy meal, feed wheat, right? And now corn on Friday, right? So China's just been taking a lot of grain and they've been taking it to, feed, and really trying to not have to worry that COVID is going to impact their opportunity to actually secure that supply. So very positive for farmers. But also very risky on the fact that it's a one destination shop. So if they were to maybe slow down or back away or maybe switch more to like Brazil, you could see prices fluctuate. And then obviously another factor with the canola is the crush margins. So crush margins have also appreciated drastically this year. We've got multiple crush plants in Canada. There's a lot in the United States, and really the crush margins, whether it's soybeans or canola or even the biodiesel markets, have been very, very positive. So as people are making more money at crushing, they're going to pay a lot more money and really promote people planting said canola. So yeah, very awesome.
Yeah. A question here from Lara. She says, if there's a second wave of ASF, it could wipe out the demand again, correct?
Correct.
Okay. And when we're talking crushers in Western Canada specifically, if they cannot source any canola, do you think they'll go into a maintenance shutdown, or will they try to replace the canola with another commodity like soybeans or something like that?
So not every plant in Canada can switch between soybeans and canola. So it would be maybe hard for them to switch into something else to crush. Hypothetically, it is possible. I have heard, shut down possibly. I mean, we're talking about 1 million to 1.5 million carry out. There's not going to be very much canola left in the summer. So I think when they're making as much money as they're going to try as much as possible not to have to shut down. And how that looks, I don't know, right? If you don't have anything to crush, what do you do? So I maybe you might see it later in the summer, but you got to remember that we do have canola that starts to come off like August, middle of August, and some of the really far south. As well as some American stuff that could come north of the border. So I'm hoping that they don't have to, but yeah, it is maybe possible, but I think basis levels are going to be very positive in the summer because it's going to be that tight.
Yeah. So talking south of the border, how's the winter wheat crop doing in the States? There's a bit of a rally going on, and you think that'll start driving winter wheat prices here?
Yeah, and the wheat side of things is that we're kind of in this wait and see, and winter wheat has been been driving most of the wheat markets up, and because going into the winter, a lot of it did not look very good anywhere it was being planted, whether that was in North America, China, Russia, and south of the border, and pretty much from the Rockies to the Midwest, they're talking that things look fairly dry. So what's going to happen, I'm predicting kind of in the next few months, you're going to see the weather markets and we're going to start to trade. How does that crop look? Are we getting enough snow? So on and so forth. So I think that there's going to be volatility, but also opportunity to trade into some of this weather market because the winter wheat does not look as good as a lot of people are hoping.
What about the Durham markets? What are you seeing there right now? What sort of predictions do you have when it comes to Durham?
So we know Durham acres are going up in Canada as well as in the United States, but Durham demand has been fairly strong. So I think it'll be consistent to next year, but it's kind of like the Canadian canoe. If more people get on the one side, it can swing things the other way. So I think it'll be positive. We've had decent demand for it, and I think that will just continue for next year. But I'm curious to see how many more acres go in. I think spring wheat will probably go down a little bit, and Durham, we already know, is anticipating to increase, which could add more supply. So I guess it's kind of neutral to positive because of the demand, but the amount of acres going in, we are going to have a significant amount of supply.
Is the spring wheat acres going down? Is that in direct relation to, you think, more people going to see Durham, or you just think in general it'll be down?
I think that you look at canola, you look at pulses versus a $7 to $7.50, maybe $8, $8.50 spring wheat. A lot of people are seeing, just different commodities being a lot more profitable. So I think that they're going to try to stretch their rotations and lower the cereals, and particularly the spring wheat that might go in. That being said, you can only stretch your rotation within reason. And can you, at this point, get the canola seed that you would put more acres into the ground with, or even more pulses to actually take out your cereal acre? So, and barley as well. We're anticipating barley acres to go up. And like I said, can you get the seed? Can you get a high yielding malt variety? So it'll be a question of kind of seed acquisition, but I think it's because of the pricing and economics of other commodities that we're seeing spring wheat go down a little bit.
Yep, for sure. Devin's got a comment here. He says wheat being dumped for barley, $5 plus barley off the combine. Do you have any comments on that?
It's kind of crazy. I mean, and part of the reason why barley prices have appreciated is because of the China demand. And the big worry that we have right now is it's very positive, but it's kind of a question of timing potentially, because if China were to back away, the entire market would drop, right? So it's not because of the Lethbridge feeders. It's not because of the malt industry this is going up. It's because of the one destination that is China. So if they were to back away, the barley would go down. So $5 off combine, and even I've heard some, a little bit higher pricing, and whether it's malt or feed, you should be early sellers of barley this year because of the one destination risk. But $5, I mean, that is a very, very good price, whether that's feed or malt.
Yeah. And Devin brings up a good point too. Following that, is the malt market going to be squished by that high feed price? Do you see that happening?
I think to keep malt, they will have to pay up for it.
Yeah, very good point. Yeah. And one more question from Devin. Thanks, Devin, for all the questions. You got some great ones today. Recent Canadian seeded acres intent report. It looks way off. Do you have any thoughts on that?
I thought so. The Agriculture Canada, I had some comments about that. I think that they had wheat not as much down as I think it's going to be, and barley they left flat. So I kind of challenged their barley number as well as the wheat being only slightly down to neutral. So the wheat number looked off to me. The barley number looked low. And canola, they had as a 3%, I believe, increase. And I think it might be more. But like I said, we'll have to kind of play things out and see what happens.
Yeah, absolutely. Lindsay's got a question here, taking a bit of a step back to canola. What's the latest with canola old crop / new crop spread?
So the inversion is telling everybody that the market wants the canola now, right? So it wants it now in the system yesterday. And as we get into the summer months and new crop, you're seeing at some point we had like $100 to $150 spread. So the market is telling us in, say the November futures that, seeding soybeans and maybe acres go up production. It's anticipating maybe a correction of the problem to happen in some of the deferreds. But I do think the spread is a little bit wider than it will end up being just on how tight canola is going into new crop. So I think there will be a correction just because obviously production, right? We're going to have production come off in September through October. But will it be enough to have the inverse where it's at today, right? So if it's $100 inverse, I think that you'll see the inverse shrink as we get closer to November. But 720 March, is that 720 November? No, we're probably maybe talking, November being 6 something or having appreciated up, but maybe not, you might not see 700 unless there's another, catastrophe to disrupt the supply that's going to be coming off. So to answer that, I think the inverse will shrink, but new crop is lower because we're anticipating more supply to come off.
Okay, thank you. So if we're taking a step kind of looking at the global perspective here, Brazil and Argentina, they have had the year of drought, and now they're finally getting some rain in it seems like as soon as they pull their combines out, they're getting rain. It reminds us, many of us in Western Canada, as we'd like to call the harvest from hell. Do you want to talk about what sort of impacts that could have on markets now, especially to see more of that struggle?
Yeah, I think the beans are hating the wet that they're getting, and it's delaying the harvest. And what I'm seeing the impact to be is where China's buying, right? So Brazilian beans are still cheaper than North American beans, and China continues to buy from the United States, which is positive for North American and predominantly American farmers. So the demand from China is in the United States, which is bolstering that market. But Brazil will have cheaper beans coming off. So it's more just, when China switches who they buy from, and it's being pushed back because it is too wet. However, wetness could impact, yield. We already know that yield is a little bit lower. But to what extent, as much as they have a little bit lower yield, Brazil put in I think, 5 million more acres this year of soybeans. So their actual supply is going to be higher than it was last year, potentially. But the Chinese demand is so great that it's lowering the carryout even so. So I think it's more to do with the delay and China having to buy more U.S. beans, which is positive for the market. But when they do switch to Brazil, that might impact some of our values in North America.
And staying on kind of the global scheme here, Devin asks, is a new February 15 Russian export wheat tariff going to push buyers towards Canada? What do you think of that?
I think it's, that these tariffs they're positive and negative. I think the tariffs obviously limit the amount of supply, and Russia had the second largest crop in history, and so they've got a lot of supply. So if they start to take that away from the global supplies, I think it just bolsters wheat pricing in general, and predominantly the 12-5 protein, so your CPS classes. But to your point, yes, they will have to. So anybody out there that's buying, 12.5 to 13.5 protein will have to go and source it elsewhere. So you're talking, the Middle East, China, anybody that's going to get probably March through August contracts will have to source them elsewhere as Russia keeps, their wheat in-house.
Do you see that occurring? Like, what sort of dynamics do you see across the Black Sea region production right now overall? Is that the same sort of story?
Well, we know that winter wheat didn't look so good, but I think that we're anticipating production to be up. So, the problem with wheat is, unlike soybeans, as much as we're like, okay, the spring wheat didn't look good here, or maybe the CP or the hard red didn't look good over there, or there's a lack of winter wheat coming off. There's just still a large, like we set a record this year for the production of wheat in general in the globe. So it's just, wheat has a huge crop we're anticipating the crop and the production to stay high, but it'll be in the different classes where you'll find the story, right? So the winter wheat and maybe some of that 12.5 protein or anything that, it basically will be in the different classes and where that demand is coming and when they can get it. I think that wheat in general doesn't have a lot of room for anything else to be thrown at it. So yes, global wheat is big production, big value, but it has been shrinking in certain classes, particularly like a spring wheat that we grow mostly in Canada, and some of the stuff in the United States. We really have been shrinking that crop, and that crop probably can't take any other hiccups to come, right? So if we have any weather events, we're going into the weather trading market. If something were to happen, it would keep wheat profitable or those futures up.
Yeah, absolutely. Now, moving over to the pulse market a bit, is container shortage still something we're really seeing when it comes to specialty crops and lentils specifically? Is this still a big issue?
I think it has correct. I'm not the expert on containers, but I believe it has made a little bit of a correction in the last couple months. I do know that the demand has appreciated in that market. So I think that the stuff that's being traded in containers, like a pea, for instance, they're more profitable. So there's a lot more demand for containers right now. But obviously with COVID and constraints globally, everybody's a little bit nervous about booking a lot of containers and not being able to get them. So kind of,
Yeah.
I suppose the value of the container has appreciated, but people are still worried about COVID and not being able to actually acquisition.
Yeah. Daryl's asking any lentil talk. He's making a joke. He's looking out for Jim Hale and Jeff Bennett, who are pulse growers. But what sort of lentil outlook is there this year?
Positive. I think the demand is strong. Obviously we've got the India demand, but the carry out from last year and just the tightness of supply, I don't think will be corrected. So we're anticipating lentils to stay positive the rest of this year as well as going into next year. But there's always tariffs that could come on that could change that situation, right? Especially India.
Yeah, absolutely. Jim's asking, I mean, we probably could put this in a little better way than Jim did. He says, why do green peas suck compared to yellows? But it's true. Why is the green pea price so much lower compared to yellows right now? Do you have any insight on that?
Feed, because I think the yellows are being bought more by China, and because of that feed market, I was on a Viterra call last week, and everybody was saying the same comment. Like, have we ever in our history seen green versus yellow be what it is today? And it's literally just because of China and the feed demand being that great and really taking all of that yellow that they can.
So then to follow Devin's asking, if you had to plant yellow or green peas, where are you placing your bet? Would you place it on yellows then?
I think access to market would tell me that yellows will have more market. Yes. But yeah.
And I mean, this is a smaller pulse question, but do you want to touch a bit about the chickpea market? Do you see it increasing at all? It's been quite low. Do you see it coming up at all in the next year?
Not an expert on this subject matter either, so I'll have to kind of tread lightly here. I think just commodity prices will bring that market up. So I don't know if it will be based on the fundamentals of chickpeas themselves, but the fundamentals of the market rising would be positive for chickpeas.
Okay. Eugene has a question here. He says, at what point does the rally in corn turn to a positive when it comes to the price appreciation in wheat?
Yeah. I think it depends on the price of what you're feeding. So I think that if you're using corn for feed, obviously corn going up is positive for all cereals. So on Friday we saw wheat moving up because of the massive buying. China bought 230 million tons last week, which was a pretty big deal in the United States. So that actually drove a lot of the cereal markets up. So corn will drive all the cereal markets up, but really it will come down to the price of what they're making it with. So if it's going into feed, the question would be the price of the corn versus the price of wheat. So it's just kind of which is more expensive. If wheat goes, $8 plus or continues to climb, I think that people that are acquisitioning either commodity will just start to weigh on which one is cheaper. And so you'll see kind of one move up or kind of them play against each other for price.
So when we're looking at some of these high prices, it gets you kind of asking the question and playing the guess the acres game. Do you have any insight on canola and what sort of acreage we could look at this year when it comes to million acres?
For which acre, sorry?
Oh, for canola, sorry.
I think they're anticipating, so if we go with the 3% figure, 3 to 5% increase, what is that, 20 to 22 would be the number. That would be my stab at the Canadian number today. So I think if you have that, the demand, I don't know, the industry's calling it about 1.5 million from this crop, and then probably closer to 1 million tons or maybe below 1 million next year with the demand strength.
And what about wheat? Any what are you guys predicting there?
we think wheat acres will go down. I've heard anywhere from about I believe 3 to 5. But production probably will be lower. Just we had a huge wheat crop this year, so I'm thinking production will be down, acres will be down, probably. I don't know. Let's even say it's 2 to 5%. Yeah, I would know. Probably the increase of canola and the increase in pulses and maybe some barley. I think wheat is going to drop, but I'm hearing it depends on where you're at. Guys can't stretch rotations too much, and they can't, a guy in Manitoba can't just decide to get into peas, right? So as much as some people can and have the opportunity to change their acres, some people are just set with it. So I think wheat will be marginally down, maybe 3%. And yeah, I think the carryout, I don't know the number off the top of my head, but I think spring wheat carryout will be getting a little bit tight, but backing into the global wheat supply, I think we're going to be fine. So I wouldn't get totally bullish on wheat.
Okay. And Lindsay brings up a good point here. She says, Jim hasn't even asked about canary seed yet. He always seems to ask about canary seed. Is this outside of your realm of knowledge, or can you comment on the canary seed market?
That is outside of my knowledge, but I could probably, it's outside of my knowledge, unfortunately.
Nope, no worries there. So looking at the 2021 year ahead, what is the biggest thing you are keeping your eyes on? Is there any large factors you're really going to watch in the upcoming months?
We're kind of at a pause. I think China will be the biggest thing, obviously, how much they get close to the rebuild and how their continued demand versus things like geopolitics. So if you think about, Biden is the new president, and China's already making threats about stuff. Basically, if you don't back off of some of the trade regulations, you better watch out. So does the China demand outweigh geopolitical situations? And could there be some volatility with that as well as COVID? And then the other thing I'm watching right now is some of the funds. So we've seen, some pretty big length in the fund position across all commodities, and we haven't seen a lot of profit taking. So just kind of watching what the funds are going to be doing in the next couple months will be very important. Because, I look back at October 28th when the funds exited, the market dropped about 30 to 50 cents. So it was a pretty big sell-off day, and I'll be watching kind of what the funds do in that market. And then obviously, planting, right? We're going into the weather market, and there's a lot of things, soybeans, certain classes of wheat like winter wheat, and even maybe spring wheat, where you don't have a lot of room for any weather anomalies. So making sure that you leave yourself open to opportunity, but also kind of hedging your risk will be kind of my main focus in the next few months.
Okay, I think that's a very good note to kind of end off. It always seems to go by so fast, but thank you very much for joining us today. It's always great to have a different opinion and to really dive deep into the markets. It's a great thing to do. So we appreciate your time very much, and hopefully we'll be able to talk to you again soon.
Thank you.
And thank you everyone who tuned in today. It's always great. I do, even if I don't always comment on it, I do see all you guys talking in the comments box. So I appreciate it very much. I appreciate you guys just having fun and being asking all your great questions. So thank you very much. And on tomorrow's RealAg Radio, we're going to have Mary Robinson of the CFA. So that'll be a great talk. And followed by on Wednesday, we'll have Danny Ottenbright. So you Saskatchewan farmers can tune in and be sure to bug him with all of your questions on Wednesday. So thank you very much, everyone. And thanks for getting real and getting connected.